Boys, welcome. Trends with Friends.
Pump it up.
I'm just stretching a little bit. Jeff was lifting some irons. Welcome, everybody, from Stocktwits, Twitter, YouTube, Starlink, and Russia. I think they're listening in. Special guest today, probably my favorite guest in my old podcast, him and Jim O'Shaughnessy. I think Jeff did 4 or 5 episodes of Panic with Friends. Jeff Richards, and there's a lot to talk about today. Jeff is a partner at Notable Capital. How much in assets these days?
We're at about 10 billion.
10 billion. So really, we should only let you talk because it's just 3 schmoes and a guy with 10 billion. And Jeff is a good buddy of mine. Seen things that are worth everybody here listening, and what a better time to talk about growth, software, AI. I think you and Michael will dominate this conversation. But without further ado, Phil Pearlman wearing a T-shirt today. 50-50 that you've showered this morning.
Labu Labdi. Remember,
Labdi,
this is
that's
an
our
old school Stocktwits t-shirt from like 10, 15 years ago. And it's the 3-time biotech bullish and bearish. So this is like the early days of degeneracy right here.
Yes. Well, lot to talk about there on Degeneracy. And Phil has got 2 degenerates of his own, like me. One's heading off to college. And then the AI whisperer, Michael Parekh.
Namaste.
I don't know where to start. I want to talk about the dollar. I want to talk about growth. I want to talk about software. I want to talk about degeneracy. Obviously, since Jeff is here, really, we've got to talk about AI, software, and growth. But we do have to talk a little bit about the macro and the flight to, not the flight to safety, the possible flight out of America, and which flight you should get on. And but before we start Cashtag Awards, let's do some Stocktwits house cleaning. They are approaching April 30th. We have a few seats left, VIP seats left, but can't wait. It's the first really well publicized, organized Cashtag Awards. Got some great comics. There'll be some roasting, but more importantly, voting is closed on about 10 categories, from Cashtag Legend to Brokerage of the Year to Best Trade of the Year, and Community Member of the Year. We did this all with the help of eToro, our sponsor, but we did this all with voting. So it's not Phil, myself, and a few people deciding this. This is tens of thousands of votes across Twitter, Stocktwits, and email. And so April 30th, you can just grab a ticket. We're not live streaming it, but we may have some edits of it for later on. So let's get right to the markets. And 2 things I want to cover, Phil, and you can just start it off. You got Tesla's earnings today, or lack thereof. I have no position in the stock. Is there? I know Mike's been correctly bearish. There was a run up into when Trump was elected. What's our feel today? It seems obvious that, well, nothing seems obvious with Elon. Is a gut feel that you have, Jeff, around Tesla, like what it's like for Elon? As you know, you've invested in so many growth companies. Do you have any insight into what you think he's may announce today, or can he stop the bleeding?
Probably not my area of expertise. I have had 3 Teslas, and I can tell you they're amazing cars. I wish we were investors in Tesla in the early days, and SpaceX, and pretty much everything Elon has touched has turned to gold. So he's, regardless of how you feel about his politics as an entrepreneur, he's arguably the greatest entrepreneur of our generation. So I have a lot of respect for him.
And how much does that buy in this era? Like, when does it? It seems like people. Well, it seems like for sure BYD, from what I see in videos, is caught up. So in a level playing field, which we don't exist in, that's not the real world that we live in. That has to be partially why the stock's selling off. Partially, it has to be He's made a lot of enemies overseas, forgetting the U.S., and that's a growth area. And the question is this a growth stock anymore? Why do you not have a Tesla right now?
I had one for 11 years and I wanted to try something new. So I bought a Rivian, which has been great. I'll also highly recommend. Yeah, I look,
What do you like better? What's better? What's a better car? The Rivians look great. I'm seeing them on the
Rivians are great.
on the
Rivians are
street all the
great.
time now. What's a better car?
The software and the service on the Tesla are a level above anything else on the market. Period. Full stop. End of story. They have a massive lead on that front. And then if you just look at full self-driving, I don't know when Rivian will have full self-driving. There isn't even a date for it. Whereas you've got that today in Tesla. So if you like FSD, Tesla's your only option, and probably will be for a while.
Okay, Mike.
Look, I've been a fundamental bottom-up bear on Tesla for a while. I still think the stock is dramatically overvalued, despite the 40-50%. As a fundamental analyst, this is not a stock recommendation, but
it is.
the fundamentals. If I've talked about the fundamental competition from China, which so far cannot come into the U.S. because of our tariffs and regulations. Europe is reconsidering some of the 48% tariffs on Chinese BYD, and they've, at last I checked, 139 automakers making cars in China. Almost every one of them cheaper and better than anything we've got here. Even though on the auto driving they're 2 generations behind, but because of the concentration of number of EVs in China as a group, the driving experience in auto driving in China is multiples better than what we have in the US. And there's a lot of YouTube videos and I've written about this and so on. We can talk about coming to the US. One of the reasons, Jeff, everyone in our circles, when we talk about EVs, we talk about Rivians, we talk about these $100,000, $150,000 cars, which is great. But if you look at the mainstream market, my brother-in-law and 10 of his friends last week all bought, each of them, over a dozen Chevy Equinox EVs. No one's heard of this on this call. I went and looked at them. The ratings are great. They're good enough. They've got 300 plus miles of range. And these cars are being sold by American dealerships in American-made cars on leases to businesses for under $35,000.
What is that a month? Because Tesla's figured out how to get
250, 12,000 mile limitation. I've got all the
pretty good
12,000 miles. I've got it's like I almost bought one.
But if you give a kid a choice between a Tesla and that, they're going to go Tesla.
Howard, just let me finish. The core thing is once you're in the Tesla.
But this is not a recommendation.
No, this is not a recommendation. I have purposely.
Hey, the kids want to go buy their own cars. They can buy a Tesla. If the parents are going to buy them a Chevy, let them have a Chevy. Let them drive a Chevy.
It's not about the Chevy. The core thing is I purposely went out and checked this out. On Uber you can do this. I asked for a Tesla, and then next I asked for a regular EV. Same difference. Go try it out yourself. The ride, the suspension, the noise in that experience, you can go test drive these things night and day. Teslas, the 3 and the Y, yes, the Y was the biggest selling car in the world, beat Camry 2 years ago. No more. If it was a fair fight, if we allowed fairness in our trade as we do in our sports, BYD, the Chinese cars would win, or the Japanese cars would win. Now in America, Equinox, I would buy an Equinox EV for $35,000 than buy a Y or an X, because the ride is so much better. I mean, my brother-in-law's car, the ride, it felt like a damn Lexus. It felt and had all the bells and whistles. It had the doors that pop out just like a Tesla. They've copied everything. And this lesson, history rhymes, guys. Look, Model T, Ford, it made him the richest man in the world in the first part of the century. He went on to become an Elon Musk, by the way, in terms of right-wing politics. That's a whole separate story. But by the 1930s and 40s, the rest of the auto companies in America had caught up. GM became GM, Sloan, etc. 6, 7 brands, and they beat Ford. they beat Ford in terms of choice, selection, pricing, quality, everything. That was just in America 100 years ago. We're seeing it now, just in American cars and EVs, and now also the Chinese, who, if we let them in, they're going to flood us.
So
And the
let me,
Chinese
Michael,
are
let me throw
taking them.
something at you. So
Yeah,
what?
go ahead.
Let's zoom forward 10 years,
Yes, sir.
Mhm.
and let's assume that the majority, I believe, the majority of driving in cities, sort of non-road trip driving, is going to be a Waymo type experience.
Yeah, I
If
can't
you've
believe
ridden in
I'm
a Waymo in San
agreeing with this,
Francisco,
Jeff.
Yes.
Like,
you don't
if you
go back.
told me I see Waymos as much, so Teslas I see 20% of the time. In Phoenix, I'm seeing Waymos equal
In
amount.
San Francisco, they're everywhere.
I
And
can't believe
so if
it's the
we
one
zoom
thing I
up,
would never have believed
the
because of
question for me
insurance,
is,
because America's an insurance country.
right. And so if you imagine that scenario playing forward, and you assume you're going to have Uber, you're going to have Waymo, Tesla's probably going to play a role. The largest fleet by far of cars that can drive themselves on the road today in America is Tesla. So I think the upside case for Tesla is we live in a fully automated driving world in 10 years, and they have the lead that may be insurmountable at this point. Number two, if you believe in robotics, obviously Elon has sold the future with what they're doing with robotics. But to me, those are the bets that you're making, is on their
Yeah.
capability around self-driving. And to me, you're looking at Waymo, Tesla, and Uber as the three major players in that category 5 to 10 years from now.
Yeah.
I love Waymo.
And you got to
but
throw
Way-
DoorDash in there because they're gonna use bikes in these cars too. They're gonna outsource to these things. So I think Jeff, listen, dangerous for me to ask a real analyst. God, shame on us for having a real professional analyst on the show, two of them at the same time. But Michael from Goldman Sachs. So Michael, keep going. I think we got to frame this. Earnings are coming out today. What
just wanna
matters,
add-
especially on Stocktwits, is what we think. This one is in no man's land. Let me just quickly say it, and then we'll throw it back to you. You have Lutnick coming on TV and all of Fox News doing an infomercial at 285. Let's not forget when Fox threw in the hat here, and Lutnick came on TV, and Fox spent a day selling Teslas at the White House, their computers. So the stock's down 20-ish%. No, not 20, maybe only 15 now. It's having a good day. So you have that overhang, right? So from a trading perspective, I'm like, who isn't in this stock, right? It's very indexed. So you got to get people to buy the futures. So you got to get people to buy indexes, right? So it's got that going against them. It's got this overhang of people that bought the stock at 280, 290 at the 200-day moving average. And then you have, I feel he'd have to be lying to not talk about the disaster that is this week's numbers. But he's Elon. So I'm saying I wouldn't short this thing, but I don't know what the upside is here, because you still got to be a growth company. And so that's why it's just a no trade. And I think it's just, you're betting on what he says. That's just not a great investment idea. Go ahead, Mike. So that's where I am. And then Phil, we'll let you have last word.
I just want to add to Jeff's excellent point on Waymo. Again, we in San Francisco, New York, in the analyst community, we over-index for robotaxi and Waymos and automated cars. I totally agree. They're going, 10 years from now, they're going to be a big part of the fleets, the delivery services, the Uber. I have long said, if you want self-driving, buy Uber as the best stock, because it's fleet
That's
management.
just been my go-to for
I
that
think
category.
that's a good call.
But let me just to add one point. Tesla itself, their people, there's a big piece on this, which I wrote about. Their internal people said they looked at the robotaxi market, even though outside they're claiming, the analysts are saying it's a $500 billion market plus for Tesla. Internally, they figured out that over the next 5 to 10 years, robotaxi type self-driving cars were urban successes. It's no more than 10% of driving in a large country like America. Why? Because most families in real America, the America that actually gave us the president that we have, okay, the real America, okay, they use their cars, drive around as a fun thing to do for family, for ad hoc drives, long distances, etc. For that, the whole robotaxi infatuation is not an applicable thing. So basically, we will see cars that have self-driving and so on and so forth. But this business of people in Iowa or Kansas or Kentucky basically calling robo-taxis or Waymos everywhere in second, third, fourth tier cities. I think that's 20 plus years away when these things are really cheap. Even the Waymos today are $200,000-$300,000 vehicles because of the sensors and the lidars. And you can say, okay, maybe in 10 years that comes down. And that's
the bull case for Tesla, because the Y
no,
is not a $300,000 vehicle.
No, I understand, but it has no lidar. The damn thing doesn't work in those beyond level 2.
Jeff has stepped into it.
The Waymos are virtual automated trams. They work on invisible rails. They're only in a handful of cities. There's a reason for that. It's just the way the technology works. Most of the cities are well mapped. The weather is beautiful 100% of the time.
There's a reason Phoenix and the Bay Area were their 2 first markets.
Exactly. So we can't over-index for Waymo. If pre-tariffs about a month ago, Google could have spun off Waymo and probably
they still should have.
They still maybe could do it. But I'm just saying, Jeff, as really professional investors, we have to kind of look at it in the mainstream framework. And as excited as I am about technology and so on, it always takes longer than we think. And then last thing I'll add to it, with the tariff picture, which we will talk about, the actual building of all the components and the sensors, which, by the way, you can take it out of China, but we can't build the damn things here. There's no ecosystem for any of this. This is one of the reasons why Elon is actually pushing back hard against Navarro and Trump, because he knows his future doesn't work without China.
Yeah, Game of Thrones, like we've never seen going on right now.
Thank you.
Okay. The good news is we're only 10 minutes off topic, 10 minutes into the show. So I think
last word really quickly. One, just as an aside, it's hilarious that Howie and I both look like we're wearing glasses and fake nose. Did you notice that?
By the way,
both, like either one, like who's wearing, like we could have a contest, like to tell the truth. We're like, please stand up. Like, well, the guy wearing the fake nose and glasses, please take your glasses.
The thing about my
real
I guess I am kind of the outlier here. I better put on my reading glasses.
Michael, I looked at you too. You have a regular nose. You have a real nose. You don't look. You don't have like.
Are we all undercover here? Is that the idea?
There you go.
Jeff is the most handsome. I mean, he's got
the bastard.
Lucky you're
1950s.
Hey, hang on. So, Phil, the interesting thing about the terrible thing about having this big a nose is it doesn't come with smell. Meaning, you think God gives you a nose like this, you could pick up the
supersized smell.
I got nothing.
Yeah, you don't. Right. It doesn't improve the size of your nose.
Which drives Ellen nuts because I have the worst gas. Don't smell anything. She doesn't know what's coming because I can't pick it up. I can't warn her.
It's helpful on an airplane, though, Howie. You probably love international flights.
Here's what I do on international flights. Just a quick aside. Nothing destroys. Nothing gives you the chance.
Fart and take a nap.
Nothing gives you a chance at a full. This is just a free tip to non-Jews, Jews. It used to be you cloth seats. You could, if you had a seat, you could dump a gallon of Gatorade on the seat, the cloth seat next to you. Guy sits down, squish, gets up. They don't have an extra fucking pad. You got a middle empty seat to you. They moved the guy. But then leather came along and, they could wipe that shit down. Tell you what works. About 10 minutes before boarding, you take an Adderall, you have some cheese and some pastrami and a glass of milk. You will have that seat next to you. Again, if you want to do it to yourself, you will get yourself an extra seat. Okay, that was that wasn't a stock tip, but it was
that was not a Larry David episode.
Either that or bring a screaming baby. Those work too. I had 4 kids, and many years we had empty seats next to us.
Phil, let's get to the show.
Last point about, just to bring it back down to the ground on Tesla. They report this afternoon. The earnings are not necessarily driving the performance. This is a political, global macro performance driver now. You see that. However, and this may be short term, but I'm just looking at one metric, number of vehicles sold. Last quarter, Q4 24, they sold almost 500,000 vehicles, 495,000 vehicles. A year ago, first quarter, they sold almost 400,000 vehicles. Estimates for this quarter, 336,000. So that's a significant decline, not just quarter over quarter. You could say, hey, Q4 is always the biggest quarter, but year over year, we're looking at almost a 15% decline in vehicles sold for Tesla. So that's a global thing, and that is a perception thing, a problem that the company and Musk will have to deal with. Go ahead, Mike.
And Phil, since you brought up new car sales, look at used car sales and cars off lease. Tesla is the worst performing in terms of residual values on the cars. People can't wait to get rid of them. They're you can buy and the best buys right now, if you want to buy a Tesla and you don't mind the social element of it, is buy a $22,000, 25,000 mile used Tesla. It's a good deal.
Yeah,
It's part of what Bill Ackman's doing with Hertz. You know, he made a couple $1 billion small trade because they've got 100,000 plus Teslas.
And here's what the thing is about markets. That's why I love having Jeff and Mike. Thank God I can bring you guys on, because it's not, we'll never get the true audience, but this is what makes markets phenomenal. This is, I don't know, we've lost there were signs of people wanting to talk about the markets like this, right? But be able to talk to like these all 4 points. Because I remember when JC was on and Tesla was 280 and it was breaking out, and JC was bullish on consumer discretionary, that whole category. And it was a huge win. Not that long ago, Tesla was a huge win off that call. And you were there and you were like, same story, right? The fundamental story. And here we are 6 months later. Man, if you didn't take money out of that trade, and so many people, the average, you know, this is very easy math with VWAPs. The average Tesla shareholder the last 5 years is down a lot, right? Unless they had perfect timing. I don't think people understand how average weighted pricing and when people buy matter. Meaning, your idea was correct, but the point is you could have made a lot of money if you. And that's what's great about markets is they're rigged. And they've been rigged in a way that everybody knew how they were rigged. And this is where we're going to get to the main point after eventually, is where today there's a new form of invisible hand, more like Z, less like America. And we're seeing that happen, the heavy hand of Trump, and one man can fix the economy. This is just too interconnected. And this is where we're at right now. We'll get to that point. But Phil, we're seeing it in the dollar. We're seeing it in flight of American assets. So take it away, Phil.
So let's go to the most interesting chart in the world. European banks. What do you
may not know this, Jeff, but now you'll see the money flow. So what makes this interesting, Phil, right, is yes, in that VIX 60 panic, like gold even went down. Everything got liquidated on April liberation of our gains day. And what you want to look for, and what's not happening with Mag 7 and the S&P is, but what happened with gold and European banks is this V bottom so far, from Argentinian banks to European banks. So Jeff, this is what's interesting to us. You can't hide out just in gold. It's not big enough. You can hide out in treasuries, and treasuries have actually done what they're supposed to do. Anti what every expert on global macro is saying, that, you know, rates are rising. I mean, they still have done what they're supposed to do into a VIX 60. But what's interesting is you've got like Argentinian banks back at all-time highs. You got Indian banks at all-time highs. Now you have the fucking European banks nearing back to all-time highs. Does this say, Mike, Phil, what do you see? Mike, what do you see? And Jeff, what does this tell you? Go ahead. Phil?
Well, the bonds, I hate to disagree with you, but the bonds don't look great. You know, like you look at a 5-year chart of TLT, and, you know, we're down in the mid 80s here.
Yes.
And if we get below 83 or 83 and change, we're making multi-year lows. And, you know,
but I'm saying without the VIX 60, you might have already been there. Meaning, since the VIX hit 60, there has been a flight to treasuries. It's not what Twitter macro is saying.
I don't know about that.
Okay.
We're getting the dollar going down, the stock market going down, and interest rates rising all at the same time, which is like, it's an incredible, the market is always complex. It always fools the most people, and it's always dynamic. And so you can never say, well, if this happens,
Correct.
that's going to happen. It's incredible. So yeah, you earn a yield in bonds, and you could buy a money market that pays you over 4%. But this is precarious also. So it's like, where really big money, where do they hide out?
Okay, Michael.
No, I think it's a key question of where the money hides out, right? And we've got a plethora of usual suspects, everything from gold to Bitcoin to, especially if its dollar comes down, which is one of the other charts we're going to talk about. But Europe, look, to what Jeff said earlier, there is a higher uncertainty of rules of the road in the US. There has been that in China, especially in the Xi regime, despite his recent swing back to tech in China. Europe, look, 2 months ago, if you'd asked me, was the least interesting place in terms of AI and technology. In this environment, and you guys have heard my views on AI and technology opportunities being pushed back at least 2 or 3 years because of this tariff regime, and we'll talk more about that. But Europe right now is probably, as a bloc, even though it's not a country, is probably higher up on my list of where I would put my money outside of the dollar and the US, because the rules of the road are far more certain. They may be slower, they may be not as tech friendly, etc., but they're not going to change as vigorously. And so I'm more interested. I'm intrigued by this chart beyond a trade just for that reason. So I need to do more thinking on that, because
Yeah.
the rules. When I look at the world on rules of the road ranking, Europe comes out higher on the top now relative to everywhere else. I'd be interested in everyone else's thoughts.
My real problem is maybe I'm not saying wealthy, but maybe I've hit a status level where I feel bad for my kids, because like Europe is a place where it's just like crossing in is like my vacation. I know that sounds awful, but like when I think of Europe, I don't think of business. I think of the VIX being 4, and like Italy and the Alps. Like I go there to unplug, and so when I look at this chart, I'm like, what? I think of like the worst possible climate for doing business in the whole flat Earth. In Joe Rogan's whole flat Earth, I think of Europe last. So it's a rewiring that's why I like studying.
But it's probably a good alternative instead of treasuries as a safe asset.
Totally. That's why I don't manage money professionally at that level, and I stick to seed investing. Like, imagine how stupid Twitter, how dumb Bill Ackman sounds to not truly talk about what's happening and just parrot party lines. Jeff, as a guy who's managing 10 billion, and you and I have this different thing about, we have to look out 12 to 15 years. I have my own thesis. I write about it. Well, how do you guys with new capital, and then obviously companies that are being affected by tariffs, you can't look at these charts. So let's just talk about growth, okay, and the rules of the game. And
yeah, I can assure you, nobody in our business has spent 1 minute thinking about European banks in any time window in the last 5 years.
So let's talk about how you're thinking about it.
Yeah, I think so. I think for those of us who've been through many crises, right? We were here for the dot-com bubble, for 9/11, for the great financial crisis, for the COVID pandemic. You have always done well hanging in with US equities and betting on the innovation curve. And if I think about Europe, do I believe that there are more $100 billion companies that are currently private today that are going to be $100 billion companies in 5 to 10 years? Do I believe there are more in Europe, the US, India, or China?
Good. That's a good framing.
I'll put 9 of my 10 chips on the US. And so if you look at what came out of 0809, 0809 was a scary time, scarier than right now, I would argue.
Yeah.
I mean, we were literally all curled up in a ball watching the financial system collapse.
Mm-hmm.
It was a very scary time. But out of that time window came Facebook, Square, Uber, Shopify, Stripe, DoorDash. I mean, think about all the amazing company. I mean, Salesforce in 08, 09 was a $2 billion company. Today it's 200 billion. So we like to talk about the fact that innovation cycles don't care who's president. Right now, we are in the mother of all innovation cycles. AI, you can disagree all day long, but we are seeing it on the ground in the companies we spend time with. Howie, you're seeing the same thing I'm seeing. Is a absolute game changer. It is going to have a massive impact on the U.S. economy broadly. It's going to have a massive impact on the global economy. If you just look, if you wind back the clock, I sent you guys a chart this morning, Howie. If you look at the impact of the internet on S&P earnings.
Yeah, let's pull that up.
Over the
They'll
last
pull it
20
up. Keep going.
years. Okay, this is a chart from Goldman Sachs. This one right here. So the net profit margin of so look at what happened between 1970 and 2000. Not much. Okay, 30 years, not much. And then look at what happens in the next 20 years once we're able to leverage the internet. And it's not all due to the internet. There's a bunch of other factors, but it was certainly a primary driver of efficiency in the business environment. And so if you take that line and say, well, what happens with AI? I believe the line will go up. Now, it has other implications for labor and things like that. But from a efficiency and cash flow and profitability standpoint, there's no question AI is going to be a tailwind, not only for the companies that are creating the AI technologies, which we're funding today, but the S&P 500, the Fortune 1000, then are going to be able to leverage those technologies to get better in their businesses. And so I just, I was joking with Dan Nathan from CNBC. I said, you guys have a show called Fast Money. We're slow money. We're betting on things today that are going to show up to the general public and public investors in 5 to 10 years. And that cycle is a mega, mega, mega cycle. And I can share some examples of some of the companies that we're funding, but the things that we're seeing on the ground are astonishing. And we're talking about a lot of functions. Everybody talks about agent force and sales and marketing and all these other things. Back office. I have a company called Vic.ai that's AI for accounting and finance and bill payment, massively automating bill payment, accelerating cash flow. So you're just seeing the early days. We're not even on the first inning of this game, and you're already seeing the impact in terms of ROI for the folks that are buying these technologies. Yeah. One delta that I think we have in the market is these companies are all private. The companies that are innovating and driving a lot of this technology right now are private. And so the public market investors have not yet seen these. They're not seeing the numbers we're seeing. Right? They're not seeing the growth. They're not seeing the ROI. They're not seeing the buying behavior, the NDR among customers who are buying more of it as quickly as they can. I think when that happens, and right now we don't have much of an IPO market, we didn't last year or the year before, but once some of those companies go public, I think you'll start seeing more of the analyst forecast baking in the tailwind of AI, and you'll see public market investors start to become bigger believers. And I think that's kind of probably a 2026 phenomenon. So we got to ride out this year. We're still in the early adopter phase, but man, if you're seeing what we're seeing on the ground, it is hard not to be bullish over the long run. And you can sort of put your headphones on and ignore what's happening in the current environment and focus on where we're going to be in 3, 5, 10 years.
And I'll give you some tips on what I'm seeing. Excellent. Phil, go ahead. Your mute's on. You're muted.
I think Howie muted you, Phil.
Sorry, my nose hit the mute button.
Yeah, exactly.
My nose was asleep on the mute button.
So if I were to ask you the question, like, how do you integrate the sort of systemic risk or chaos that is currently occurring, that we're all like, what the fuck is going on? What you just said is sort of the approach. It's like, listen, this is stupid, this is turbulence, but put the headphones on, ignore it the best you can, because when we come out the other side of it, what's happening right now is mega, and that's not going to change.
I don't, in our business, we don't get paid to trade. I don't trade. Personally, I don't trade. Most of the investments I make, I've owned for
so easy.
10 years.
I mean, have you not been on Twitter?
I've owned sales. My cost in Salesforce is $3 a share. So
loser.
If you have that long-term perspective, it helps to sort of tune out the current day-to-day environment. I will say, anytime you have uncertainty in the market, it creates challenges for people who are running businesses. You're hearing it from public company CEOs as they come out with their earnings guidance. And I think you're going to hear a lot of it over the next few weeks. And the same thing is happening for private CEOs. It's hard to hire. It's hard to make decisions about when you're going to raise capital. It's hard to do those things.
Mhm.
The one thing that's really interesting right now, and how you mentioned Panic with Friends, I came on with you in March of 2020, which was a very
But that was
scary
obvious
time.
to me. I want to go. That's why I started that show.
But what I'm going to mention is the founders who are running these companies today, they lived through that pandemic. They lived through the massive down cycle of 2022 in the market. They've lived through a dearth of IPOs over the last 24 months. They've had bullish fundraising markets and bearish fundraising markets. And so, we're not seeing anybody panic. One of the benefits of being a part of a firm, the partners that I work with, we work together on average for 14 years. We've all been through cycles. We've seen good days. We've seen bad days. We've seen noisy days. We've seen calm days. It allows you to just focus on the big picture, which is who are the best founders? Where are the biggest market opportunities? And how do we put capital behind those founders? And I think it will, if you believe that 100 years of resiliency will bear out and surf through whatever noise we have in the interim, man, it's hard not to be bullish on tech right now. And you're going to see, I was just looking at Meta, it's taken a beating in the last few months, but if you've owned Meta for 3 years, you're up 170%.
Yeah. No,
Is anybody
listen,
complaining
that's why
about being
you're
up
here.
170% in 3
This is
years?
not called Panic with Friends. This is Trends with Friends, right? We like the macro, but as I tell founders, if I catch you talking about macro when you don't have customers, then why did we back you? So we also have to remember, and this is what I hate about the discussions on Twitter right now, is that the hardest thing to figure out is macro, right? And so it's insulting that so many people that have chosen this now as a profession on Twitter, and all I've ever preached is what's the price? European chart is fun to look at because it tells you something. It doesn't tell you everything, but you have to start putting these pieces together because prices are where money is flowing. Go ahead, Mike. You have a lot to say here on that.
No, I love what Jeff painted with the earlier charts, especially the chart from the 1970s at Goldman Sachs. That's my alma mater. I started at Goldman in 82 when the firm was less than 2,200 people. I've lived through the same cycles as all of us have lived through, Jeff, all the one key thing, and my worldview has fundamentally changed over the last 2 months, but not just for the tariff stuff, which I've talked about on the show, but there are a string of self-inflicted things that are going on that, independent of the volatility of the public and private markets, have repercussions that we have not begun to internalize, that affect everything, that the optimism that I share vehemently with Jeff about tech and a US, and as the bend in the place to, Warren Buffett says the US is the single best place to invest, but yet he's sitting on the largest cash reserves a week
Correct.
before
Don't
Woodstock
see what they
Omaha,
say. Watch what
that
they're
I'm
doing.
going $318 billion, and I'm going there, for that. So my point here, or the key point I want to make is, none of those crashes, there were single issue things, there were external black swans. This time it's self-inflicted. You've got half the country that is supporting this for a whole bunch of reasons: political, economic. We talked about, the financial people. Howard, you talk about, the financial people that we know.
They're
But
happy to just
but
troll.
what I'm getting at is that as an investor, private public, one always has to constantly look at our assumptions. And the big change beyond the big changes are every one of those 1970s to, and I headed Goldman's Internet in the 90s. So I love that chart. Net margins 11%. I love it, because I used to spend huge times with our economists that, the productivity and the value of tech is going to come through, and it's coming through in the numbers. But all through those decades, the US was basically 70-80% of the market for the technology and users and internet. Today in 2025, it's flipped around. 60, 70, 80% of the users of 8 billion people are outside. Yes, they monetize lower, but they're outside. The supply chains for everything we need, even for just the pure software companies that, Jeff, you're talking about, the underlying pieces that make the businesses run, that use every one of the companies that you're talking about and the metrics that are going, they can't get enough. I see it as well. But, whether you're a consumer company, you're a manufacturing company, small, medium, large, your business is getting eviscerated. Right now, everyone is so complacent. The word of the week that I want to use is complacent. Investors are complacent. Business owners are complacent. Voters are complacent, because we think this is all normal. And that the tariffs have come, and Trump is saying, oh, there's no economic effect, just fire Powell. Okay. The reason is the world is just eating our own inventory right now. It takes 3 months, 6 months for the inventory that's already in the system to eat through. We have not seen the price impact on anything, everything of, and those second, third, fourth tier effects, that's not in the markets. It's not in the
And
public
I
markets.
think
It's
Jeff
not in the
knows that.
private
So
markets.
here's what I'm going to.
No, I know he knows that, but here's my point, that what happens if instead of a 10-year, 15-year outcome on private investments, it's 20 years, because we've changed. That's what I don't know.
The
Thank
idea
you.
of trends with friends.
a risk.
You guys are summing up, and then Phil psychologically can go here. This is listening to you both. You're both right. Let's take the dollar out of it. Let's take European banks out of it. Let's take the price of gold out of it. Let's take what Bitcoin is. Let's take all the noise out of it. Jeff is correct about AI. Just because an idiot like me, the last guy into a trend, is so excited about AI. Now, Silicon Valley's job is to get excited about every new thing. Why? Mark Andreessen has to, because they can't afford to miss the one. So whether it's Google Glass or crypto or, the game that's going to fix the Philippines, or it's Google Wave, or it's the BlackBerry Fund, they have to play because they have to play, Mike. That's the game they've chosen, and their LPs have bought into it. Our game, I can't at Social Leverage afford to be wrong once about one of these big trends, because then my fund returns less than 1 DPI. That's the real world that I live in, meaning I have to make sure that the thing is going to work. And that means I'll miss the open AI, most likely. I mean, I don't tell my LPs I'm going to find that. And hope now, 2 years into AI, I'm like, oh my God. Now, with Web 2.0, I saw it much early because YouTube, everybody thought YouTube was a joke. I was a user of YouTube, so I thought it was genius. With OpenAI, I write my own blog posts. If I wrote like OpenAI, my wife wouldn't yell at me in the morning for spelling errors, and I would know. I don't know if anybody's reading my newsletter versus writing it myself with errors. My wife goes, "You write like a monkey," and I go, well, "At least you read it." So AI, I missed the first year and a half because it didn't appeal to me. Now, every tool I look at goes, what the fuck am I not using that for? So Jeff totally is correct. And what I gather from what you're saying is, and this is the disconnect that I see in my industry, which is get your fucking head right about prices and what you pay and the fact that it may take 20 years, and stop fucking screwing up the next wave, which I worry about, by by doing the same things we did in Web 2, which companies won't get public. They'll end up in the private markets. And this is the stuff where you're right about, Mike. We have structural issues with IPOs, not just that companies aren't going public. Trump got paid to go direct via a tweet to raise 70 billion or whatever he raised. Why would you go public? Second of all, ETFs, as Van Eck has told us, they can't buy IPOs. Hedge funds and mutual funds used to be able to buy IPOs. So no matter what we scream about IPOs, structurally, they probably aren't coming back, right? And so we have real structural problems, which you are right about, Mike, which I think that the canary in the coal mine is two things. People are overpaying, knowing everything that we know about interest rates, deglobalization, the idea that hard assets matter. You can ignore it, but they matter now again. And the idea that America, as Jeff said before the show, is kneecapping cash flow, which was and Andy Kessler says the exact same thing. He's like a smaller version of Jeff Richards, a genius investor that I read at he's totally right wing. And I like his right wing. It's good. It's old 1980s right wing. And he's pissed. He writes for the Wall Street Journal. And he's like, what the fuck are we doing? We had all these high margin businesses. Why are we arguing about it? We were winning. We had high margin businesses. We have a distribution problem. The rich are getting richer. And any policy we're seeing today does not solve the actual problem, which is poor people are getting fucked. And I don't have the solution to that other than dance on their grave like Chamath and David Sachs do. What I'm trying to educate people is, what are they supposed to do? So Jeff is correct. Michael's correct. Phil's always been correct that people are crazy. And in a world where people are crazy, the policies are different and AI is going to work. You have to be really smart about who your partners are and who the founders are and what the cap table looks like at the beginning, right? And that's the kind of stuff that will fix this, because I don't think it's going to be IPOs, and I don't think Trump's going away anytime soon. So I think you have to realize those few things, and that's the trend that we're in. AI is for real. All these technologies are fantastic, but we're kneecapping. I mean, Jeff, you got to see this. Like, we just killed
I don't-
NVIDIA.
I
NVIDIA was
don't-
going to get killed one way or the other, and we just killed them.
Yeah, I mean, to me, the one part of this that is hard to get your head around is we were in a motion last year where the Magnificent Seven companies had committed over $180 billion to CapEx, predominantly for AI infrastructure. And so you look at that and say, okay, we're setting ourselves up to be the base layer of the infrastructure of the future of technology for the world,
Yeah.
not funded by the government or taxpayers, all funded by cash flow from our leading companies. And so
It was
I
a
would hate
form
to
of tax. We
I
were
don't- I
forcing
don't-
them to
I don't wanna
spend on
see that.
innovation.
I don't want to see that slow down. The one
Yeah.
thing I would say back to your question, Howie, which is what do we do about sort of inequality and folks on the lower end of the spectrum? I don't, there is no argument where higher tax rates solve that problem. We've seen that. We've had high tax rates that didn't solve the problem. We've had low tax rates that didn't solve the problem. To me, the best way to get more Americans to share in the growth of our economy, Brad Gerstner has a great idea called Invest America,
Yeah.
which is you give every kid at birth, there's 3.5 million kids born every year. You give every kid $1,000 account that invests in the S&P 500. By the time they're 52, it's worth around $250,000.
Yeah.
Every
Get
kid in
everybody on the
America,
game. Get
everybody in the game, everybody benefiting from the next Apple, Google, Facebook, Microsoft, et cetera, and giving people an account that they can check and see, okay, this is how compounding works.
Yeah.
I mean, if you're an investor, I have a Wealthfront account, which I love. I think it's a great product for the average investor. If you have a Wealthfront account, in the last 5 years, even after the latest pullback, you're down 6-7%, your Wealthfront account. But over the last 5 years, you're up 50-60%. Through all the gyrations, through the COVID pandemic, through the ups, the downs, the good, the bad. And by the way, it's very tax efficient because they do tax loss harvesting.
Yeah.
And so the single best answer was for somebody with $1,000 to invest, or $10,000 to invest, or $5,000 to invest, set up an account like Wealthfront. Don't try and trade Tesla or European banks. Set up a Wealthfront account, put your money in it every 2 weeks, and watch it grow over the next 5 to 10 years. Now, will it grow as fast as it did the last 5 years because we had this exceptional turbocharged market with low interest rates? Don't know. But you're going to do better than you are trading in and out of stocks and equities and paying tax every time you do. And trying to time the market and deal with all these signals and everything else, it's madness. It just doesn't make any sense. And so that's the one thing I've been trying to tell people, as somebody who's been through a lot of cycles. I've been in Silicon Valley since 1995. Ignore the noise, focus on the big picture. Whether it takes 3 years or 5 years or 7 years for AI to make a massive impact on our economy, I don't know. But what I know is if we bet on enough of the right founders in these categories, they will benefit from that tailwind, and they will be the companies that are driving the next wave of productivity for large enterprises and for small business. We funded a ton of small business companies that are using AI. S&P in the US is 42% of US GDP. It's 55% of employment. So to your point, Michael, I hope we're also not kneecapping small business, right? I don't want cost of goods to go up. We don't want cost of labor to go up. We need to enable small business to be successful in America. I do think AI will be a major tailwind driver there as well.
Okay.
Jeff, to that point, the number to watch, Trump will make a deal on the China tariffs, the 145%, and that'll get adjusted in the next 2 or 3 weeks. The market will probably go up on that because it'll be like a, he stopped shooting.
I solved my own problem.
Yeah, exactly. But the real number to watch is the 10%. I just watched a 30-minute presentation, and anyone here who was interested in market, watch it. It was a presentation by the Prime Minister of Singapore.
You mean the 10-year?
Sorry?
The 10-year?
No, the Prime Minister of Singapore had a speech on the U.S. tariffs.
It's very good.
Basically,
worth watching.
And worth watching. And the core thing he said was that the 10% that Singapore is zero tax already, and then 10% is tariffs across every country in the world. That's the number Trump needs to adjust, because that's one of the things I'm watching before I rethink my valuation regauge in private and public markets today, because that 10% still puts us above Smoot-Hawley in the 1930 timeframe, which, as we all know, led to the Great Depression. And yesterday, Wall Street Journal front page, the worst stock market performance since the Great Depression. It's the first time I've seen the Great Depression used on a modern today story, and so just get used to it. And that, by the way, took 6, 7, 8 years to play out. So I'm not saying we're there. And the last thing I'll just say that we have these wonderful things. Quote of the chart of the week. I want to give you a quote of the week. Is Jensen Huang, who I think is one of the best entrepreneurs in America, right up next to Elon Musk. To your point, 33 years in terms of what he's done with NVIDIA. He just went into the teeth of the tiger, into Beijing, in the height of all the anti-China stuff. Came back and he literally said China was one of the most important markets for NVIDIA, not just in terms of what they sell, but what they make. And that is something worth listening to, because what he's really signaling is that and you can see similar words from TSMC, Morris Chang, another Taiwanese American founder who was the CEO of Texas Instruments before he got lured to build TSMC in China. Both of them are saying that under the current regime of tariffs in the world, 10% tariffs, etc., they're just not optimistic on building the underlying semiconductor technology supply chains that got us the thing that we did. And I am as optimistic, if not more so, on AI than you. I've been doing a blog for almost 700 days every day. This is my life, AI. And I am now having to rethink the underlying assumptions because of this. Not in terms of the optimism. I'm as optimistic, if not more so. It's just that now I have to put in the time delay and I have to rethink my valuation benchmarks.
And that's what I'm saying.
One data point I'll just share. You mentioned the Wall Street Journal. I saw that cover article. Something people don't. We need to parse that, because if you think about on a year-to-date basis, the S&P 500 is down roughly 10%. I'm not using today's numbers. This is based on yesterday's numbers. Down roughly 10%. The Mag 7 is down 22%. The other 493 is only down 5%. So yes, this has been a very challenging 90-day window. But if you were diversified as an investor and you own the 493, or you own things like, dividend payers, VIG, SCHD, you have exposure to things that are not the Mag 7. And obviously anybody that owned SPY was heavily exposed to the Mag 7. So much of this has been driven by those 7 names.
Agreed, Jeff. But if you, I love the 493 metric. The one thing I would add is, again, if you look at it in the context of 10% tariffs, forget the 145, 10% tariffs across every country in the world. Just throw, WTO and GATT, all the agreements and the free trade agreement, just throw them out the window, which is what he did. 10%. Those 493 businesses, the only reason they're not hurt and their quarterly numbers are not hurt yet is because they have been complacent. They're eating through the inventory of whatever
it hasn't shown up yet.
It's not shown up. Yeah. So let's look at it in 6 months, and it's going to be a debacle.
Take time. This one will take time. Again, digesting you both. Bill, digest what they said, and what does the shrink say?
A big takeaway here that goes to our behavior as investors and as the people watching this who are also investors. And I think Jeff touched on it earlier, and it is this is a psychological issue. Emotional control, emotional regulation is patience. That patience is so critical to the investment process. And it really is a component of emotional regulation. Hey, can you control yourself? Can you stop? You have these emotional impulses. You have these feelings. You're really angry. You're on the left. You're on the right. It doesn't matter. You're pissed off. Can you take that and just say, okay, you know what? I'm going to sit here with it, and I'm not going to do anything boneheaded with my portfolio in the interim that I'm going to regret, to Jeff's point, 10 years down the road, when I need that money, when that money is useful to me. Okay, let's move on, because we have a hard stop. Producer's telling us we have a hard stop at
there you go.
There you go. Exactly.
Patience.
Just
patience.
super patient.
It's
a Munger quote, right? Is it a Munger quote or
why do we have a hard stop?
We have a hard stop at 12 o'clock. I'm not sure exactly why. I know I have a thing, but I think multiple people. I think he has a thing too.
What about
Michael's just getting going with his signs? This is a new innovation, and Was that AI, Michael? Was that AI or was that you?
It's a combination. It's trade secret.
Exactly. So what I want to get, we have a new feature that we're going to run today that's beautiful. Now Keith is telling us 12:10. So we can
Okay,
keep going
good.
for a little while. But
12:10,
let's
let's
do
do
this
it.
feature anyway. New feature and this is really, this just warms my heart to know
Yeah, this
that
goes
amid
to
this stupidity, there
Yeah.
is a degeneracy is still alive and well, and that people are still gambling, rambling and gambling.
Mhm.
And here's
Put your money
a
where your
tweet from
mouth is.
Kalshi. What's that?
It-
Degenerate
we
degenerate
are in
tweet of the week.
Listen, we could call it the tumbleweed economy. We could call it the degenerate economy. We can call it, and the reason I call it the degenerate economy is it's just a modern version of the sin economy, right? Like it's all about profits. Okay, you may not like it, but it's all about profits. My degen economy ETFs only down 3% this year, like Jeff said. Like it's a travesty if you're in the wrong stocks because he's kneecapped growth, and that's not good. Jeff and I are growth guys. Mike appreciates growth. Phil's an indexer. We need growth. But in the meantime, degeneracy grows. Robinhood has betting. Kalshi is, it's not for me, but man, when I saw this yesterday, I'm like, yes, we're not dead yet.
That's
Because
wild.
this combines our sense of humor, which makes America great, our culture. This combines the settling of the West, which is you're an idiot if you try and cross, but it could be fun if you do. And like, who will the next pope be? The fucker isn't cold yet from dying. So God bless the degenerates.
I got to
Kalshi,
share a story
Robinhood.
with you, Howie. So my son, this is a
Oh,
couple
you have an
months
insight.
ago.
Is your son an expert on conclave? Because does he have an
He's
insight here for me?
14, but he's a gamer. He loves playing, all the various games they play. And we're sitting there watching an NBA game, and he said, "Hey, Dad, can we flip over to the WNBA game?" I don't know which game it was. And I said, "Why do you care about the WNBA?" He said, "Oh, I bet on them tonight."
Yeah.
And in
Good for
his
him.
God
bless him.
In his gaming environment, they've got a thing where you can use virtual coins to bet on various sports. He's betting on the WNBA. And
They
I'm
will
like,
do it.
oh my
If
God,
you-
we're wiring these kids at 14 years old to think that they need to have something riding on the game. I mean, it's just, it's.
I hear you on the negatives, but you're not going to take it away. You can't.
No, it's not going away. It's not
because
going
they
away.
have free time. They have a magic
Look,
wand in their
as
hand.
long as they
They
build
have
on
a
it and
car that's
learn.
driving them that's safer than a human. They have all this extra time. What did we expect them to do? So
I love it. They're learning probabilities and they're learning risk
math.
reward.
They're
There you
learning
go.
math.
That's the glass half full, Michael. I appreciate it.
And by the way, there's a chamath of the WNBA. There's nothing but bad takes, and he's going to get wise, and he's going to say that guy's like chamath. He's always wrong. He's the moosh. So let him go find good leads for good betting. So I think the degenerate economy a week, it's not so much that it's a growth industry. It's that speculation as entertainment is a monster trend. And if you told me that Kalshi and what was the other one that the other Poly Market would make
you can
me
do it on Robinhood now.
smile, because I'm not a gambler. But if you told me that I'd be betting on Robinhood and laughing at Kalshi and longing for nostalgia at the beginning of 2025, I'd say no way. But this bet is real. It's a
So anybody
way-
who's listening to this and not watching it, I just want to read the tweet really quickly.
Okay, go ahead.
This is a Kalshi tweet. It's a betting market. Because you asked 5,000 times, we listed it. Cardinal Pietro Parolin is the slight favorite to succeed Pope Francis. See the full. It's great. It's fucking poetry.
It's great because
see the full list of candidates and real-time odds on Kalshi. So people are betting on who the next pope is going to be.
But it's bragging rights. It settles things. It leads to data. It leads to better thinking. It leads to, of course, there's probably some grifting going on and some inside information. But that's the world. Certainly you learn to play the game and get cut with $1. Better to get cut with $1 today than with $1 million when you get handed it by your parents in the hand down. So interesting chart. We were going to talk about a few more things, Phil. Obviously AI, but was the Ben Hunt article? This goes to the negativity. So Ben Hunt is one of my favorite thinkers.
Epsilon theory.
I don't think I'd put money with him, not because I don't trust him, because thinking is different than investing, right?
We're
I
in the
saw
early stages of a bet. Here, this is from Ben. We're in the early, and this is the negative view. And I love Jeff's. It's a nice counterpoint to Jeff's long-term optimism.
Yeah.
We're in the early stages of a bank run on the United States and the U.S. dollar, and everyone on Wall Street is heading for the exits, including domestic investors who will exit not because they want to, but because they know the not so golden rule.
And the
Dark.
rule is you
It's an
have to
amazing
assume-
piece.
I read
Yeah,
it.
must
It
read.
was it is great. It's a good read.
Must read.
Okay, so a good read does not make good investment advice. I think what Ben is saying, and this is why I think this one was interesting, because Ben is and I think alike, but I can't let that thinking get into my investing. And generally, what's interesting about Ben's stuff is he gets 10,000, 20,000, 30,000 views. This got 1 million views pretty quickly. Okay, which goes to the mental state of FinTwit.
The higher the
They're
VIX, the higher the
searching
clicks.
for confirmation, right? They're searching because it's so obvious, right? Because the prices make it, well, if these three things are happening, we know what happens next. When we know what happens next, anybody honest would say we don't know what happens next. There's probabilities. But the guy in the White House can undo a lot of this. Not all of it, but undo a lot of this. I think that's the mastery of the markets. You can never master. You have to place bets according to the risk. What Ben is saying is that you've seen the movie, and the cutthroat people, if they see a chance to get out ahead of you, they will fucking get out ahead of you. There's no honor in getting out ahead of you in the world of money. It's just get me the fuck out. And so you do have to know that's a possibility that's going down. What I would say in return to that is they know that you know that that's going on. So again, you have to be very careful of like what your time frame is, and really think things through before you panic. Because I think the right time to panic is Trump told you what he was going to do in February, in January, in December. So when he did it, is not the right time to panic. Now, Ben could be right, and this would be the best time to panic. It rarely is that obvious. And so what I'm
thing
seeing,
I would say is, if Wall Street and hedge funds are smarter than the average investor, why do 99% of hedge funds underperform the S&P 500?
again,
That's a good.
I mean, I'm
it's
asking.
the reason I read it.
By the way,
that's a
I'm an
good
investor in 4 hedge funds.
No,
They've all underperformed my wealth.
Oh my
franchise
God!
for the
Yes,
last
we
3, 5, 10
have that
years.
in common. We have that in common.
That's
Massively
underperformed. That's a
underperformed.
great question, but it's a separate question. It's
a separate question.
What Ben's article is really about, because as an ex-Wall Street, he's just saying, pay attention to this signal. He's quoting margin call.
That's what I want people to
with the
read.
hedge funds. Okay, he explained his process. He explained even in the free part of the article, if you're not a subscriber, and I would recommend subscribe. I just subscribed $200 today. But the point I'm making here is that
use Stocktwits. I get $20 for that. No, I'm kidding.
No, exactly. Thank you. No, the core thing is that what he's pointing is what we talked about on the show a week ago: contagion risk. Because he talked about him cutting his Bear Stearns relationship a month before Bear Stearns went to zero in 3 months.
Yeah.
And that's what he's talking about. It's not about performance of the hedge funds. It's that the entire financial industry, both and the bond market and the stock market, they all do these carry trades, pair trades, all that stuff. That is about to get really jostled by the realignments of all of the stuff that's happening that we all agree has months to play out. It's not hit the financial market. So he is warning that the signals, we're going to see contagion risk. So that's why we can't just say, oh, crash of 87, I was there. Crash of 2008, I was there. Those are all blips, and we learned through 40 years of this by the dip. This time, it's really freaking different because the chart I have posted on my wall over there is Smoot-Hawley and everything, because this is on the league of that. And trade today is 3 times bigger than 1930 around the world. When you talk about 493 small businesses in America that are the guts of the public stock market in the US, none of them have been hit by this yet.
Yeah.
And so I want to just say that's what Ben is talking about.
People should read it. I've always said people should pay for
read.
Ben, but don't pay Ben for investing advice. And I'm not saying that to knock Ben. What I'm saying is learn. right? How the system works. Try not to get run. This is a moment where you could get run over. And so you should understand what being run over would look like. These people will run you over. It's like, Seinfeld makes jokes about this. Costanza, when there was a fire, he pushed the woman over to get out of the room. It was funny. This is not
And
Seinfeld.
Michael, let me ask you a question.
These people do not care if they burn your family on the way out the door. No, the other thing that I would say about
they'll go on CNBC, pump it, and sell into
dump
that.
it.
Just
Yep.
But
so
do
you
you,
know.
but do you think
So you
anybody
know people
do you think anybody in DC is listening and reading that
No,
article
no,
and saying,
no. No, I spent a lot of time in DC. This is not their signal. It's what you said when you lived in DC. They worry about an entirely different set of metrics. And that's why they're missing China. I am very concerned that it's a bipartisan support to bash China right now. All the Democrats really want to do is a lighter version of the Trump tariffs on China, which is defeating. That's why we should listen to Jensen and TSMC.
We should listen to Jensen. Yes. And Mike, what I say, you should listen to Ben from this standpoint. When GME did do its thing, it rolled over the people that had a model that said it can't do this thing. And all that Ben is alerting to you is if we are in a position where that thing could happen, and all the people telling you it won't happen have no idea what this looks like. Why? Because I call it the Kerplunk economy. So, that game where it was a two-dimensional game, you pulled out a stick and marbles would fall. And the whole idea was not to have marbles on your side. Trump has pulled out every stick every first day and doesn't remember where they went in again, as you can tell. And that's dangerous, is all I'm saying. When you play a game, when you pull everything out and go, don't worry, I can undo everything again. This is not as easy as like a board game.
Not only
that's
that,
why I think they say 5D chess, and that's an insult to people.
I made a complex system, unintended consequences.
Trump is attacking, not just forget tariffs, he's attacking everything at the same time. I mean, everyone says, if Germany in the 1930s and 40s, if they had just focused on not attack Russia, the multiple wars, they might have had a shot. This time, this guy who thinks he's a genius is attacking everything at the same time. Colombia, I'm going to kill him. Harvard, I'm going to kill them. Tourists, I'm going to kill them. Tourists are down 20-30% from Europe. Okay, which is Goldman just had a report, $90 billion impact on American GDP from tourism.
But yet the market's up today. So what I'm saying again, guys, is the market is quickly trying to price this. And I'm not saying it's doing it right. And that's why you should read Ben. Because if they're pricing it wrong and Trump continues to triple down and say, look, the market's not doing so badly, this is why you read Ben. But again, I'm more in Jeff's camp, because I think the biggest problem that people are doing is running when they should just be focused on what's my time frame? How long will this company really take? Does this founder understand valuations and like not running out of capital? Now, what in Mike's defense, no one really, not enough people are thinking about the world that patiently, which goes to
Jeff. Final word. We're out of here. Final word. Great to have you, by the way. Thank you so much for being here.
Great to be with you guys.
Final word, brother.
Look, the articles like that, and I read the article. I actually read it last night, laying in bed on my iPad, and it is scary. And I lived through the great financial crisis in 08, 09, and admittedly, really, that was the first time for me that I tried to sort out what was going on and why it was happening. Because in Silicon Valley, we have the benefit of being very myopically focused on technology and the innovations that are 5 to 10 years away. That was really the first time that I think it impacted everybody in their day-to-day life. And so as I read Ben's article last night, and I've been reading a ton of stuff from Goldman and Morgan and others, it is very easy to get scared. And I have friends who I'm on a group text, I'm sure you guys are, where people are like, I'm going to all cash. And nobody knows how this is going to play out. And I think that's the scary part. And Michael, as you said, Buffett, which by the way, amazing. He gave that signal months ago and everybody ignored it.
Not everybody.
I would just echo the point I made earlier, which is, look, I can't control what happens in DC. We don't control the macro. I will just share with folks that the level of innovation in Silicon Valley is I've been in Silicon Valley for 30 years. This is the highest I've ever seen. More products being developed, more products that matter being developed. The funding market, Howie, as you implied, is somewhat inefficient. Things are getting overfunded and overfed. But man, you talk to, Dylan Field at Figma or Aaron Levy at Box or anybody who's in the middle of this ecosystem in our world, it is really hard not to be bullish on the long term. And so my only parting word for the folks in DC that are controlling a lot of the levers here is, let's not screw this up.
Yeah.
We're in
stay
the
out of the
middle
way
of
a
a
little
massive
better.
wave
Stay
of
out of the way.
innovation that is going to positively impact our country and the rest of the world's economy. And I hope we don't screw it up.
Yeah. Michael, last word.
Thank you. Only reason I keep putting this Buffett thing up is because in 2008, majority of all my net worth that came from my 20 plus years at Goldman was tied up in Goldman Sachs, which was going to go like Bear Stearns. The signal that turned around everything was when he did a very
Bailed them out.
special deal, not just
Yeah.
bailed out, but he did a deal that no one on the planet could get, 5% plus preferred, special pricing, etc.
Plus
with
warrants.
Goldman Sachs, plus warrants, etc. He made gazillions on it, but he waited patiently.
They weren't called warrants. They were called Warrens.
Warrens, yeah, exactly. But my point being that wait for the signal, patience. I agree with Howard. Don't go for the don't go for the exits, but be patient. Watch the smart investors do your work, and that's
Follow
why
some
both
smart
things
people.
can be
This
true.
is the time to
Both
look
sides
at
can be
smart
true.
people.
And
Jeff,
thank you.
again.
Jeff,
Much
thank you. Good
love.
job.
Great to see you guys.
Fellas, we're going to see you next week in New York City for the Cashtag Awards. That'll be awesome. Really looking forward to it. Adios.
See you, everybody.